Hello and welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, Dalal Street continued to rattle for the sixth straight day. We saw Sensex going below its 81,000 levels in intraday deals, and even Nifty slipped below its 24,750 levels, a crucial support zone that experts were mostly eyeing on and debating that if this level got breached, then it would intensify further sell-off as well. Market breadth also continued to weigh towards the declines, with majority of the sectors ending the session in the red. Yatin, it looks like the investors have not brushed aside the fears of geopolitical tensions or the rising Chinese markets yet as well.
Global geopolitics, and not only that, the crude oil prices have now from a level of $70 per barrel, almost touching that $80 per barrel. Doesn't augur well for Indian equities. Also, if you look at the Chinese markets, they'll open tomorrow. There is a high chance that we could see a very strong gain coming in for that market because that was shut on account of holidays. And we also have the US elections, which is there as a near-term event for the market. So yes, for the month of October so far, we are down 5% each on Nifty and Sensex. And the Bank Nifty also saw a 1,000-point intraday volatility, ending the days at the lowest point. So yes, the markets continue to remain volatile, and as you said, the sixth straight day of pains coming in for the Indian equities.
That's right. All of the sectors, they also ended in the red, with Nifty Metal and the realty indices bearing the brunt of the worst sell-off. Now, what stood out well in the Nifty 50 charts was M&M, ITC, Bharti Airtel, Trent and Infosys. ITC particularly dominated the list after it bagged NCLT's a nod on the demerger of its hotel business, but we'll be talking more about that later in the segment as well. M&M also rocked the chart, given its Thar Rocks bookings had impressed the street as well. Now, what did not do well on the Nifty 50 list was Adani Ports, NTPC, Bharat Electronics, SBI and Coal India. But yes, quite a broad-based sell-off that we saw. India Wix, once again, that shot up over 5% to settle above that 15 levels as well, which showed that, there is a sign of unease in the markets as well. But in the broader markets, mid-cap and small-cap indices, that also declined up to 3% in a trading session as well. Yatin, both the broader indices, they declined for the third straight day as well. So what do you make of it for the broader markets as well?
Yes, I think the broader markets continue to lag the key benchmark indices. In fact, today the advanced decline ratio was 1:10, so only one stock advancing to every 10 declining. So the market breadth was extremely weak. If you look at stocks like Railtel, RVNL from the PSU pack, both of these stocks were down 8.5%, 9% in intraday trade. Jubilant Ingravia, Anantraj, all of these stocks also falling by nearly 7-8%. Also, if you look at stocks like Idea Cellular, Z. You look at Ease My Trip, if you look at RBL Bank, all of these stocks are now at 52-week lows. In fact, Idea has slipped below the 10 rupee mark and now heading towards that 9 rupee mark. So yes, the broader end of the market really witnessing some overnight selling, and also today a lot of FNO stocks also remained volatile.
That's right. FNO stocks also remain volatile. But coming to some of the stocks in focus, well, Titan, that was one of the top mover of the day as well. The stock cracked about 3% in intraday deals, despite, a healthy September quarter update. Now, the core saw 25% year-on-year growth in Q2 update, wherein the domestic jewelry segment was up about 25% year-on-year in the second quarter. Now, the Titan has added 75 new stores in the September ended quarter, which totals their retail network to about over 3,000 stores additions as well. Now, brokerages have given a divided outlook over Titan, while Morgan Stanley has given an equal weight rating on Titan and has shared a target price of 3,570 rupees. Macquarie has shared an outperform rating on the counter and has shared a target price of 4,1100 rupees per share. Investec, that was one of it was on a contrary bet, that actually shared a hold rating on Titan and shared a target price of 4,100 rupees per share. Now, Investec pointed out that weak steadied mix could impact margins of Titan. They also pointed out that the eyewear segment has lagged behind the overall growth. more than that, they have also pointed out that the non-solitaire has seen double-digit growth, while the solitaire has seen a decline in the September quarter update. But like Yatin, is there a valuation concern for Titan, because we have seen quite a sharp run-up as well for Titan as well. But currently, experts are pointing out that most of the positives have already been priced in for Titan.
Yeah, I think valuations will always remain a concern, because if you look at the entire Nifty pack or Titan, the valuations are much higher than what the 10-year average is or a 5-year average is, whichever period you want to compare. But I think it was largely profit taking. The stock started with a 2% gain, then a 3% downfall when it settled finally. So yes, stocks continue to remain volatile, and despite a good month of September as well as the Q2, we have seen some bit of pressure coming in on stocks. Whether or not it is related to higher gold prices, which slows demand, or general footfall falling, that is to be seen. But if you look at the overall set of the markets, clearly banking stocks were also in focus, because there also, Lovisha, we had a lot of updates coming in. Now Nomura has come out with a note on Federal Bank as well as the AU Small Finance Bank, and one clear trend is seen is that the advances growth has been slowing, which is the loan growth is slowing, and the deposit growth rate, which is picking up off lately, also hasn't seen much of an improvement. Now if you look at Federal Bank, Nomura has a buy call with a target of 240, and given the fact that the CASA growth was steady, it was moderate on a year-on-year basis. In fact, the CASA ratio has improved for the bank by nearly 76 basis points to a level of 30.1%. But yes, the soft deposit growth is something which is concerning the street at this point in time for Federal Bank. Also, AU Small Finance Bank, the base is smaller, and the bank is deploying aggressive methods to not only grow the advances but also the deposit franchise. In fact, if you look at the loan to deposit ratio, that has declined by almost 5.5%. However, the CASA deposit, which is the current account and saving account deposit, that has recorded a growth of nearly 32.5%. And loan growth has been also quite strong, over 40% for AU Small Finance Bank. So yes, select pockets of banking showing some strength, but if you look at the large cap end of the market, something like a HDFC Bank or ICICI Bank, the loan growth as well as the deposit growth is something that we will watch out for the quarter, because this is one space wherein brokerages are expecting that this time there could be some pressure on the credit cost, given the fact that asset quality might show some weakness, and also the cost of deposits are rising steadily for all of the banking majors.
That's right. Yatin, as you pointed out, HDFC Bank, that will be also keenly watched out. In its September quarter update, we saw about 5% sequential growth in deposits front as well. But that has also brought down the LDR ratio of HDFC Bank. But we'll watch out how the banking stocks actually perform in the near term as well. But coming to next stock in focus, IT stocks that held the ground in a market sell-off day. Nifty IT index, do note that it was up about 16% from the July to September quarter, as investors are hoping that that IT sector downgrades have bottomed out, and from here on they will be seeing a revival in the discretionary spending and BFSI order book as well. So JP Morgan, that came out with its reports upgrading LTI Mindtree to overweight. JP Morgan also upped the target price of LTI Mindtree to 6,900 rupees per share. It has also bumped up Emphasis to overweight rating and has upgraded Emphasis target price to about 3,400 rupees per share. They believe that the recovery in BFSI sector is key for the outperformance of the IT stocks, and the Fed's rate cut is expected to boost the mortgage market for the US BFSI names as well. So rebound from earlier quarters, they believe for the IT stocks could be possible, since BFSI forms up to 60% of most of the revenue of IT firms. It could see an increase and an uptick in discretionary spending as well. But Yatin, do you believe that the revival in BFSI, because Accenture, when it came out with its recent quarter update, it said that most of the discretionary spending was a key critical part of it, but majority of the client spending and everything saw a recovery, but BFSI was the one pain point for Accenture. So for other IT stocks, do you believe that it will help for them, for BFSI, given for the revival?
Talking about revival, most of the IT companies believe that second half could be better. But I think a lot of participants are waiting for the Q2 numbers, especially from TCS and Infosys, because they are the IT bellwethers. and whether or not TCS and Infosys dole out a better guidance or a better outlook, the IT sector, outlook as well as the stock performance would depend on that. Having said that, I think TCS, is a large company, base is large, BFSI is one of the leading segments. Whether or not they do better is somebody's guess, but Infosys is probably better placed, especially with the kind of pickup that we have seen in North America. But yes, events like the Federal Reserve rate cuts, the trajectory, the US election is something which is also holding back a lot of corporates from spending a lot on the discretionary segment. That is one thing to be watched out for, but as of now, doesn't seem that the green shoots are quite visible. Only time will tell and the quarterly numbers will speak whether or not it is a great time for IT companies to be in the BFSI segment.
That's right, for IT stocks. Another stock in focus was ITC. It dominated one of the Nifty 50 pack as well. After the company bagged NCLT nod for the hotel business demerger. So the hotel business demerger, it was already announced in last year in August as well, and the co is expected to maintain about 40% ownership of ITC hotels, wherein the ITC shareholders are expected to acquire 60% in proportion to its parent. But Yatin, so far ITC, it hasn't really performed well. It has only given about 10% returns, and it has underperformed benchmarks as well. Do we expect the investors are waiting for the value to unlock and for ITC to perform in the coming sessions as well?
So whether or not FMCG volume growth picks up is somebody's guess, because the monsoon has been great. So FMCG companies are hoping that there could be some good revival in the demand moving forward. But when it comes to the hotel business demerger, I don't think so the markets are really gung-ho about it, because the structure is that still ITC will hold a majority share. Plus, the minority gets a very small portion in the overall holding. The management is trying to, unlock value at different stages, but this is one event which was more or less known and probably not a big trigger for the stock moving ahead.
All right, not a big trigger coming in for ITC, but we'll watch out how the market unfolds as well in the coming sessions, given that Nifty and Sensex both have extended their losses to the 6th trade day as well. But on that note, we have come to an end of this edition of the Closing Bell. But do stay tuned to moneycontrol.com for all the news updates and the market insights.